Good morning and welcome to the day ahead. It is Wednesday, April the 16th. I'm Andrew Gagan. Well, the local share market is set for a modestly negative beginning this morning, with ASX futures down just 3 points. Global investor sentiment did improve overnight in the absence of any substantial developments on tariffs. Stocks on Wall Street largely negative as earnings came back into focus. Consumer discretionary stocks struggled, whereas tech and financials were among the better performers. Bank of America topped estimates for first quarter profit as interest income grew, and its shares rose sharply as the second largest US lender brought in 9% higher trading revenue. Citigroup, the third largest lender, reported a profit surge in the first quarter as its traders reaped a windfall from volatile markets that fueled client activity. Changes in US trade policy are confusing the outlook for companies, with expectations that executives will be reluctant to give earnings guidance. Johnson & Johnson's chief executive saying that proposed tariffs on pharmaceuticals would create supply chain disruptions, and that favourable tax policies would be a more effective tool to boost US manufacturing capacity of both drugs and medical devices. The company's shares ended lower after the company missed estimates. United Airlines forecast lower than expected profit for the current quarter and warned of downside risk to its full-year outlook if the US economy slips into recession. And in Europe, luxury goods retailer LVMH's first quarter revenue fell short of expectations as shoppers in the US pulled back on beauty products, while sales in China remained weak. Well, President Trump is open to making a trade deal with China, but Beijing should make the first move. So says White House Press Secretary Caroline Leavitt. The ball is in China's court, she says. China needs to make a deal with us. We don't have to make a deal with them. China wants what we have, the American consumer. Or to put it another way, they need our money, she said. The latest US data shows import prices in March fell 0.1%, while export prices were unchanged, but those readings were taken before the imposition of tariffs. And the New York Fed's manufacturing survey index rose, but shows the sector remains in contraction at negative 8.1 compared with the prior reading of negative 20. Yields on US Treasury debt have eased further. The 10-year was down 4.3 basis points to 4.32%, and the US 2-year yield was at 3.85. Bond strategists polled by Reuters say an economic slowdown in the wake of President Trump's tariffs will eventually compel the Federal Reserve to lower interest rates, which means the 10-year yield would decline to a median of 4.21% by the end of June. The US dollar rose against the euro and yen. The Aussie is up, currently at 63.4 US cents. And Bitcoin is trading around 84,000 US dollars. Oil prices are little changed. Brent crude futures were down marginally at $64 a barrel. Copper is flat. Iron ore up almost 1% to 100 US dollars a tonne. And the gold price has gained on renewed safe haven demand. US gold futures up almost 0.5% at $3,240 an ounce. Locally today, the Bank of Queensland reports its half-yearly results, while Iluka, Karoon Energy and Rio Tinto provide quarterly earnings. And Air New Zealand has downgraded its earnings guidance for the financial year. That's your day ahead. See you again tomorrow.